phones on silent mode, or you may switch off if you please. So phones on silent mode or switch off. Thank you. With this, I would like to invite our first panel for the session, the subject being the need for regulation for the business valuation profession. The panelists are Mr. Nick Talbot, CEO, IVSC UK. Sir, may I please ask you to come over. Mr. Mark Zyla, Chairman, IVSC USA. Guys. Mr. William Hanlin, President and CEO, IACVA. Mr. Elvin Fernandez, MD, Khong and Jaafar, Malaysia. Mr. Chander, Sawhney, Partner and Head, Corporate Professionals. Mr. Sandesh, Hegde, Founder, SHCA. And our moderator for the panel, Mr. Michael Badham, Executive Director, IIBV Canada.
So thank you very much, panelists, for joining us. How do I get to the first slide? Is there a way of getting to the first slide?
Yeah, we have a technical advisor.
Thank you. Well, while we're waiting for the first slide, I wanted to welcome each of the panelists. What we want to talk about in this first panel is what's going on in the world of business valuation, and the introduction by Nick of what's happening in the world allows us to think a little bit about, and I guess my first question to the panelists is at a very high level, and I think Nick, you alluded to this in your presentation about what is the definition of a profession, and when we look around the world, we see different models of what a profession is, and you listed some criteria, but I think there's been some discussion, and we've heard Sir David Tweedy talk about it. Is business valuation actually a profession? And in particular, when we'll ask our panelists to comment on, is the business valuation actually a profession, like accounting and law and medicine and other well-respected professions? And if it isn't a profession, what is it? And what do we desire as business valuers? What do we desire to have? And so, Nick, maybe if you could just answer the question: do you think business valuation globally is a profession?
Does this work? Not yet, Michael. Is that good enough?
And is that the same throughout the whole world, or?
Actually, no, that's unfair. I mean, if you look at the country that you come from example, where you have CICBV is what I would consider to be a high caliber profession. They have all the ingredients that we talked about in terms of a strong qualifications process, strong body of knowledge, demonstration of competencies. They're introducing things like practice monitoring, where people hold themselves out to scrutiny, saying, I'm a professional, my work is good enough, I'm not afraid of people scrutinizing my work. There is an ethical code of conduct. If you do something wrong, then you'll be investigated for that. I think that Canada is a good example where there is a strong profession from a business valuation point of view. And it's expected that you have that qualification there, and it's well respected. Unfortunately, most countries around the world don't have that. So in answer to your question, I think that business valuation should be a profession. It deserves that respect, but we need to see those barriers to entry in place in every country. And by barriers to entry, I'm not talking about restricting the numbers of business valuers. I'm talking about having the quality requirements that make sure that someone that is holding themselves out as a business valuer is a strong practitioner.
Chander, would you have any comments on the business valuation profession in India right now?
So India has been seeing valuations for the last 6 decades, but what essentially is changing is the methodologies that have been applied. And without any regulations, I think it's really difficult to come at a common consensus or even a range. Like Nick mentioned, valuing and arriving at a 140% difference speaks something, and many things are happening in this part of the country as well. So I certainly believe that valuation should be governed as a profession, more in terms of the ethics, methodologies, standards, qualifications, continued professional education and all that. But yes, I mean, unless and until there is a standardization, it's really difficult. And let me just tell you, like we were discussing, that in our country, there are different regulations which have prescribed methodologies and valuation for different purposes. Some have prescribed following a particular methodology. Some have left it to the discretion of the valuer. Some are saying apply the international models. But how do you apply that? How do you apply a complex valuation? How do you choose comparables? Do you take average or mean? Do you take what kind of discount rate should be there in a, I mean, these essentially a place which is already doing this for so long knows about it. But our country has not really seen complex valuation for quite some time. The valuations we have seen are investment bankers doing valuations for issues, more on the basis of comparable companies. And when it comes to complex valuations, I think in 2016 itself, India has seen the light of NDS in line with the IFRS. So we are just couple of years old when it comes to financial reporting, and the registered valuer is still yet to be implemented.
Yeah. Interesting. So one of the topics that, again, arose is the use of valuations within financial reporting, and in particular IFRS, and the movement away from historic cost accounting to current value reporting. And I think Sir David Tweedy has said a number of times in public places, Sir David, the chair of the IVSC, that it's not within accountants' DNA to do valuations. And so there is a need for other professionals who are educated and trained in the area of business valuations to be able to opine on certain values within a balance sheet of a company. And you know, as we see more of the need for this, the role of accountants, the role of business valuers will increase. You know, Elvin, in Malaysia, have you started to look at financial reporting in IFRS, and what are accountants doing there to look for professional advice?
Mr. Chairman, I want to answer the first question first.
Please.
Now, my opinion is that valuation is a profession. So you're asking whether business valuation is a profession. My opinion is valuation is a profession. Whether it's real estate or business or financial instruments, those are subsets of valuation. Valuation is generic. And that is a recognized profession in most countries. Anyway, in Malaysia it is. Just like valuation is a recognized profession, just like accounting or medicine or engineering or law and so on. It's a recognized profession by all the regulators and so on. Now, no doubt we are in the early stages. We are in the infancy in many of these things. Maybe we are even in the infancy in real estate. And business valuation is something pretty new. It's coming about because of IFRS and so on. Now, Malaysia is we have fully adopted IFRS. And what has happened is that because of the full adoption of IFRS, it is beginning to be, these business valuations are beginning to become important. And so it is not just the big four accounting firms who do valuations anymore. And even if they were even if they wanted to do all the business valuations, they would not have the manpower to do all that. So what is happening is a lot of people are getting interested in business valuations coming in, business valuations beginning to be set up, to grow. The real estate people, and I'm part of that, we want to do business valuations as well. Because we know that business valuation is generic. The principles apply. So now I attended Ashwath Damodran's talk many times, and he has a different view. He says it is not a profession. He says it's a craft. So he does business valuation, he calls it a craft. Something you do over and over and over again, but that's his view. So what is happening in Malaysia is that the Securities Commission, which is a very powerful regulator in Malaysia, is beginning to recognize, they have got real estate under control. We've got the Malaysian valuation standards, which is also linked to the international valuation standards. And we've got the Securities Commission's asset valuation guidelines for corporate governance. With these two things, real estate valuation is regulated. If you do a valuation in Malaysia for mergers and acquisitions and so on, every page of your report is scrutinized. And you will be asked questions. And if you cannot answer the questions, the ultimate punishment is 3 million or 10 years jail. The ultimate punishment. Nobody has gone to jail as yet. When I told my wife about that, she said, if it comes to that, take the jail. Anyway, so this is what is happening, Mr. Chairman. That answers your question?
It certainly answers the first question. But what, in terms of Malaysia and financial reporting, are you seeing more requirement for valuation services in financial reporting?
Okay, financial reporting has started in the last 2 to 3 years. Mm-hmm. Now what is happening is it's beginning to, the demand for these services are beginning to grow exponentially. So that is why a lot of accountants as well as non-accountants are getting into the picture. So Nick referred to MIA, Malaysian Institute of Accountants. They have a committee and they're looking into it. The real estate people are also looking into it. So what we are trying to do is we want to get together and the accountants and the finance people and valuers, and we want to get together and move forward together, rather than divide and say, this is my territory, that's your territory. Because it's not easy for everybody to understand that valuation is actually a generic subject. The same principles apply whether it's business or real estate or financial instruments or anything else.
Great, thank you. Mark, from a U.S. perspective, Nick mentioned that the U.S. has not yet adopted IFRS, and yet the work in the U.S. to create the new credential, the CEIV, is around helping valuers become credentialed in performing valuations for financial reporting. I wonder if you could take a couple of moments and just explain what's happening in financial reporting in the U.S. requiring valuations, and also what the role of the CEIV credential is and the training that's going on in that area.
Sure. One of the things that, with my involvement with the IVSC and doing work in financial reporting, one of the concepts that have been installed over the years is part of valuation is that the work that we do is in the public trust, the public interest. And I think we as a profession don't think of that as often as we should. And what we mean by that is the work that we do is utilized by management. Management takes responsibility for it, but it goes on financial statements where investors make investment decisions based on our work. And in the U.S., what occurred coming out of the financial crisis, in 2011, there was a concern by the Security Exchange Commission, as highlighted by a speech by the then Deputy Chief Accountant of the SEC, a guy named Paul Beswick, expressed some of the concerns that we were just referring to about valuation. That there is a public interest, there's a public trust from the work product of valuators, but there were concerns that valuation truly wasn't a profession in the same sense that there's not common education requirements, there are not disciplinary mechanisms, there's not CPE requirements in general, like other professions. And this SEC in his speech just basically told the profession in the United States that you guys need to get your act together, or we're going to do something to help you get it together. And so in response to this, in 2011, in response to this, the leaders of some of the global valuation firms, global accounting firms, the Appraisal Foundation, the IVSC, got together and met with Mr. Beswick and some other regulators and to address some of these concerns and to see what basically they were looking for. And the outcome of that was something that was referred to initially as the Fair Value Quality Initiative. And what the Fair Value Quality Initiative was a set of 4 work streams. There's a governance work stream, a qualifications work stream, education requirements, and so on, to essentially develop a common valuation credential. And so what we have now in the US, at least, 3 valuation professional organizations, the American Institute of CPAs through their ABV credential, the Royal Institute of Chartered Surveyors, and the American Society of Appraisers jointly developed a credential just for valuations in financial reporting purposes that is now known as the CEIV, the Certified Entity in Intangible Valuation. And that came online last May. They started offering a single examination, single education requirements, and they're now in the process of instituting some governance, some quality control provisions. So slowly it's coming together, but it's just on the precipice of being instituted by the Big 4 firms and others. And there's been a number of people that have actually sat for the exam and have obtained the credential. So it addresses a lot of what we're talking about, at least in the United States for financial reporting purposes. Hopefully addresses us as a profession, addresses some of the issues of public trust, and provide some common, at least a common credential in financial reporting, even though it's sponsored by 3 valuation professional organizations.
Thank you. And Bill, I know that your organization has a credential that, and you've got members effectively all over the world. You've really got one of the only, in a sense, global designations, although the RCIS and certainly the American Society of Appraisals also has members all over the world. What are your members seeing in terms of financial reporting requirements, and are they doing much work in this area? What's happening? What are you hearing from your members?
Well, see, this is an excellent question. Every one of the speakers this morning has talked about the valuation of financial instruments or valuation for financial reporting. And that's really where this benchmark of best practices will take hold and will develop throughout the world. And the reason it will do it that way is because financial reporting for public companies is paramount in the public trust. The people that have most at stake for the public trust for values of public companies are regulators. Regulators get concerned when the news media reports that this very famous company that has all of this value is all of a sudden worth nothing, and that nobody seems to know about it right up until the moment where the company said, we're closing our doors. This creates concern. And that's why this is almost universally the theme that you hear from panels like this, is that financial reporting is what has everybody's attention. But I want to tell you a little story that actually has more to do with the profession becoming a profession or more professional. And it goes back to a presentation I made 6 years ago in Chennai. This meeting had 250 people. It was almost an outdoor facility. by the local group of chartered accountants, and they wanted me to say something that would be useful. And I wondered what that might be. Because you see, valuation isn't not just about financial reporting. Valuation is about mergers and acquisitions. It's about tax transactions. It's about helping triers of fact solve controversies. And if you want to see what controversies are, all you got to do is look at any page one of any newspaper here in India, and you see where lawyers and judges are arguing about something that is crucial to them every day. They don't know everything, but they need to decide everything. We watched this evolution in the United States. 25 years ago, you could go to court and have an economic dispute between partners, and nobody would call a valuation expert. There would be no discussion, no testimony, no questions on how did you get your numbers? Why is this reasonable? Why is this a reasonable value? Today, judges will not make a decision without hearing from valuation experts. So, what's going to happen here in India? Financial reporting is going to be real important. In my presentation in Chennai, I took on one aspect of valuation in India. It was at that time in Chennai referred to as the CA20 rule. Anybody ever hear of that here, the CA20 rule? All right, it's the Chartered Accountants 20 rule, where you value the asset approach, the income approach, and if you can, the market approach, and then in the end, you average them, and that's the result. So I gave my focus in my presentation in the short period of time that I had on what happens if you just take an average of independently arrived results versus making a conscious decision to choose the right approach for that valuation. And the results were remarkably different. It was like Nick's presentation about the differences in value, 140%. And yet averaging is what you do when you give up because you don't know what else to do. Do we want to be a profession? Do we want to be a profession here in India? What we need to do first is decide that we don't know everything. Second, we need to decide we don't have to be right all the time, but we have to be reasonable. And number three, we have to decide that we will use the recognized best practices that are used everywhere else in the world. I don't know how many of you are accountants out here, but before IFRS, every country had its accounting rules, and they were incredibly different from country to country. And if you ask in a cross-border deal, well, why can't you give us your accounting records according to the records that we're going to need to make a proper evaluation? The most common answer would be, well, we don't do it that way here. Our accounting standards don't require that we do that this way here. A profession will use a single set of standards to reach a common context for reasonable value. One other misconception. A lot of people that are not doing what we do in this room, they think we set the price. We do not set the price. Buyers and sellers set the price. Valuers set the value, usually within a narrow but reasonable range. It's not our job to set the price. That's not our job. Our job is to advise the price. The price might be in this range based on the art and the science that will always be part of the valuation profession. Now, I'm not a real estate appraiser. If you asked me to value this building, I'd have no idea where to start. Well, that's technically not true, but I have had no training in valuing tangible assets. 100% of my training and IACVA's mission to train you is in valuation business, intangible valuation. There are methods, but they're not always the right method. You have to still think. If you're a surgeon, you go to school, you pass board examinations, you go to continuing education, but when you cut, your experience and your knowledge will tell you, do you cut over here or do you cut over here? Do you make that incision this big or this big or this big. That's experience. Our organization can't give you experience, but we can teach you what best practices are. And those best practices, however simple they might be, is where every profession starts. We want to help India come into the 21st century as modern valuers. India deserves that. India deserves to be seen on par with any other valuation group in any other country. And lest you despair that there's a lot of work to do, I got news for you. I live in the United States. There's still a lot of work to do. But we have to begin. Michael's right. We have members all over the world. We get to see them in very sophisticated environments, and we get to see them where everybody's going, what do you do? David Tweed likes to tell the story that everybody knows what a CPA is. Does everybody here know what a CPA is? Everybody? Nobody? Nobody knows what a CPA is. Yeah, come on. This is a participation panel, okay? So, Sir David and I, we were in Korea a little over a year ago, and David tells this story about everybody knows what a CPA is, but not everybody knows what a business valuer is. And I couldn't resist. And I got up and made my presentation, and I said, well, Sir David, with all due respect, I was at a sort of a casual social affair a number of years ago, and you know, I was listening to this young couple and the business that they were developing, and then they turned to me and they said, well, what do you do? I said, well, I'm a CPA. And this young man said, oh, what's that? And I thought he was teasing me. I said, well, what do you think a CPA is? He thought about it for a second. He wanted to give the right answer, and he said, are you a car parking attendant? IACVA sponsors the ICVS, the International Certified Valuation Specialist. What is that? Well, come and find out. It's a benchmark credential that says you have enough information to go do this competently. Does it make you an expert? No. But it tells the people that you work for you have some knowledge and you can be trusted to either do the right thing or find somebody to help you do the right thing. You're not in this by yourself. You're in this with the man or woman sitting next to you, or across the street, or across the country, or in another country. We facilitate people getting their assignments done the right way by hooking them up with people who can help them do it until they can turn around and say, I can help you. I apologize for the digression.
Thank you. Thank you. So I think the panel definitely supports the concept that business valuation is a profession and needs to continue to evolve. We need to begin to develop regulations, and we know in India the ICCI and the MCA are beginning to formulate these regulations. But I'd like to hear from Sandesh a little bit about what's happening in India on the ground in terms of what valuers are doing, and will these regulations add additional costs and will these costs be able to be passed on to various clients? Can you give us a view of what you see as a business valuer practicing in India? What do you see on the ground that everybody in the room is probably keen to put up their hand and say, well, but this is what's happening in my practice. What are you seeing generally?
So first, I want to make sure I'm audible. Everybody can hear me at the back.
Yep.
Yeah. Okay. So basically, in this esteemed panel, I represent all the small valuation firms in India. And I would also like to put some thoughts on a couple of points you asked earlier regarding valuation profession in India, valuation for financial reporting. So I'll give my own perspective. So normally in a valuation engagement, there are two parties. One is the person who's getting the valuation done, and the second is who's the user of the valuation report. And what I've generally observed is that the user himself does not see much value in the valuation report. The reason he's getting it done is because somebody is asking him to do a valuation. It could be for regulatory purpose, it could be for compliance purpose. Sometimes the auditor is asking for a valuation. So generally, if a valuation is getting done, it's more for compliance or somebody's asking them to do it. And a lot of times what's happening is that it's like a lot of times investors say, we've already done the transaction. So can you give us a report which will support the compliance purpose? Yeah, and so even for financial reporting, see the background for all this fair value and IFRS is, you go back to the Enron days and the financial scams, like how accounting can be manipulated. And you go back to the 2008 financial crisis about financial instruments. So why there was a need for better financial reporting. So the intention of valuation was to do good financial reporting or to improve financial reporting. But today in India, like when we are doing valuations for financial reporting, what's happening is like the company, they come to us and they're like, okay, the auditor asked me to get a valuation done. Can you do it for us? And frankly, nobody actually sees that, okay, I should do a more transparent financial reporting or I should do a better financial reporting. The onus is more on I should satisfy the auditor rather than focusing that I should present a more transparent financial and do a better financial reporting. So I think that is the way you should approach valuations. So I think we need a mind change here, and we want people, the users of the valuation, to approach valuations more differently. And in terms of valuation developments, what's happening in India, so I see that some steps are being taken to kind of improve financial, like valuations in India. There are regulations which are coming up. The Insolvency Board, the SHCA is trying to do some efforts because there's a lot of confusion regarding startup valuations. Are they justified? So there is a onus on improving the valuation framework in India. I think steps are being taken, but we'll have to gradually observe how the adoption happens. I hope that the adoption happens at a faster pace, and it would require the support of the whole ecosystem, the valuers, the users of the valuation. So I think this is my thoughts on.
Can I make a comment on this?
Please.
I think we have to not be confused with the new regulations for valuation and the standards for compliance for, say, financial reporting. I'm in complete agreement with what you say about the reports that are written by valuers in connection with financial reporting. We do that too. Our clients don't read those. They want that so they can give it to the auditors and say, see, we had somebody who knows what they're doing do this work, and so you should take their word for it. But all that does is move the responsibility for answering the auditor's questions to the valuer instead of management taking responsibility, which is what's intended. So management doesn't often read these reports. I'll tell you who does read the reports, and that's why we can't just be buttonholed into one set of requirements for one type of valuation, that is financial reporting. A lot of small practitioners, I consider our firm to be a small firm practitioner. We do a lot of work for mergers and acquisitions. We'll write fairness opinions. Somebody comes along and says, oh, I'm going to buy this company for $2 million. Is that a good price? So our job is to go in and do the valuation after the fact and see if there's value to support that price. I promise you somebody's going to read that report. In a merger and acquisition set, if we work for the buyer and the buyer says, I have an opportunity to buy this company for $100 million, is that a good price? They ask us to do valuation work to tell them from an objective point of view, disinterested party, independent to all the facts and all the people, whether that's a good price, or it's too expensive, or they're getting a bargain. But they don't know how to do that. They will read our reports. When we do work for litigation, for partner disputes, for business disputes, judges generally read our reports. Certainly the lawyers do. The least read report, in my opinion, is the one that's done for financial reporting. And
I was talking more from the Indian perspective.
I do understand, but you know, there seems to be this cloud around this emphasis on financial reporting when really valuation as a profession encompasses so many different things. And so you need to educate your clients Look, we're all valuers, so we know what we're supposed to do, but what you need to do here in India is you need to educate the stakeholders, the clients, the bankers, the lawyers, the regulators. This is what's in a valuation. And then you need to be responsible enough to write those kinds of reports. We have a large constituency in one country where I am constantly told by our group that's there, well, we don't write long reports like you guys do in America. I said, well, why not? Well, the law doesn't require it. Okay, so let's go back to the initial question here. Are we a profession? Or are we not? Are we going to give our clients useful information, or are we only going to do what the law says we have to do? Which side are you on? Is this about fees, or is this about being a professional? Are we going to police ourselves like they're starting to do in Canada with their own peer review program? Or are we going to wait for regulators, or even worse, judges, to tell us that we're doing the wrong thing?
So that's a good spot to move to the next slide, I think, Bill, because I think it's perhaps useful for the audience if maybe Chander, you could talk a little bit about the evolving regulations in India. And I've got a couple of slides here, but maybe if you could just give an overview of what, and I think, Bill, to your point, the professions generally evolve as a self-regulating group, but ultimately, if there are competing organizations within a country, eventually the regulator has to step up. And I think, Nick, you raised the question of Saudi Arabia, and we've seen a really fascinating example of, in fact, not the profession stepping up, but the regulator stepping up and saying we need to move into the 21st century and laying out a very thoughtful program for moving the whole profession forward as a way of moving and advancing the entire economy forward. Anyway, I think the regulator in India is moving in this direction, and maybe, Chander, a bit of an overview of your understanding of what they're doing and how it's going to evolve.
Yeah. So, in respect of what exactly this registered valuer is trying to do, see, the company's accounting is done under the Companies Act 1956. It was there earlier, it was 1956. After about 5 decades, the Companies Act was changed and it got amended in, a new act was placed in 2013. And in 2013, when the new act came, there was a provision under section 247 of registered valuers. Now that prescribed who will do valuations and a broader perspective that the valuations under the act will be done by a registered valuer. After about 4 years from 2013, on 18th of October 2017, this registered valuer provisions have got implemented. So what exactly these provisions are saying, we must understand, because internationally there might be a different perspective, but if it's the law of the land, we have to abide by that, and everything has to be done within the 4 corners. So one, it is prescribed that there should be certain qualifications to do valuation, and for qualifications they have prescribed the chartered accountants, the company secretaries, the cost accountants, and the cost and management accountants. And in certain cases, graduates also. So first is who can be a valuer, there is a qualification. Second, anyone who wants to be a valuer must attend some courses done by registered valuer organizations, VPOs or RVOs. So at present, the IBBI is the regulatory authority for this registered valuer, and they have prescribed a 50 hours course for each class of assets. So broadly 3 class of assets have been segregated. One is the plant and machinery, second is land and building, and third is the business and equity. So like Nick, you mentioned, it's not tangible and business and financial instrument. Financial and business have been clubbed in one. And then there is land and building, and then there is plant and machinery. So if I want to be a valuer, I need to be a chartered accountant. I am a chartered accountant. I have to qualify this, I have to take education of 50 hours, which will be conducted by the RVOs. And then I have to qualify and pass an examination which will be taken by the IBBI. So once these three things are done, then a person is entitled to practice as a registered valuer. What they have done more is that they have put in certain bylaws and model code of conduct is there in the registered valuer rules if we read. And it is partially in line with the international standards. Like it mentions that a valuer need to take due care and undertake due diligence in the valuation. A valuer cannot just write that I have not validated, reviewed, not done diligence. Ultimately, if there are, naturally there has to be limitations. There are limitations in evaluation. So you can cite the limitations, but it can't be that you mention and it disclaims your responsibility. That's so there is an element of professionalism which is there. In case a valuation is done which is till the time the standards do not exist in the country, the valuations is allowed to be done based on the international valuation standards. Now whether the international standards are the US standards or UK standards or Canada standards is not clear. So you need to convince and meet the ministry of why you should have these standards. And there is even stringent penalties including imprisonment provisions if the valuer does something that is wrong. So the objective is very clear. Intention is to regulate it as a profession like it is done in other countries. Intention is to have the qualifications, experience, the CPE conditions, and focus is in a manner that gives credibility to the world at large. Because now if IFRS is there, I mean, so the problems that you were saying, those problems don't exist because the accounting has become uniform now. So if the valuation also takes that form, it's going to help. Just I'll mention one more thing. As on date, this valuation standards or our registered valuers is covering only 2 acts in India. One is the Companies Act 2013 and second is the Insolvency and Bankruptcy Code. There are several other cases where valuations are required. Like if you do an FDI transaction, then Reserve Bank of India wants a valuation. For SEBI listed companies, there is a different valuation. For income tax regulations, there are different valuations. So because these are different authorities, so ideally they should converge, but that convergence would take or could take maybe another year or 2 years. So at present, even after this registered valuer comes, these registered valuer provisions would cover a particular set of valuations, and so far as the other valuations are concerned, there are no standards still.
It's interesting. Nick, just to put you on the spot a little bit, I think we've seen this issue of various government agencies or and maybe even broader than that in terms of jurisprudence, where existing valuation standards are making it difficult for countries to adopt or implement, and actually people are using different words in different countries, converge their standards to international standards. Can you just reflect on perhaps what's going on in some other countries with respect to the point that Chander is making, that there are different sets of valuation standards within a jurisdiction, and as a country tries to converge onto a set of international standards, some of the challenges that they might be having?
Sure. So I think the situation is slightly different in India based on my knowledge, because I think what Chander is saying is he's talking about the different regulatory authorities that have an interest. So you have SEBI as an example, you have IBBI, which is taking on what seems to be the prime regulator role, you have the MCA, which actually designed the law, and I know there are a number of banks in India that have certain requirements. My understanding is that whilst there are certain requirements, they're often in relation to things like who can do the valuations, as opposed to actual standards. So from my understanding of the India context, correct me if I'm wrong, but there's not a prescribed set of standards in India. And so I think there is an opportunity there And in fact, I've got a meeting with Dr. Sahu and his team at IBBI tomorrow in relation to talking about standards in India. And I found India very welcoming in that the MCA invited us to the different round tables and discussions on this, and very open, hopefully, to having what will be an international approach. There are difficulties, but actually the difficulties in converging to standards tend to come where a country has got a very long history in its own approach. And we've talked a little bit about the US. The US is a prime example of that. So what is currently the #1 economy in the world, I think it's still just about there. China and India are obviously catching up very fast and likely to overtake at some point. But the US has an unusual history in terms of different asset class valuation, professional organizations there. And we have a huge amount of support there. There's support from the standard setter in the US to converge to IVS. There's something called a bridging document which shows how you can use their approach as well as in conformance with IVS. But it is a challenge. But most of the challenges come from countries where there's a strongly embedded approach. Here I think there's an opportunity for India to have an international approach. But then you get down to the peculiarities as to whatever the local customs are and whether or not they should prevail. And I've had interesting discussions with different stakeholders on this because, as I said earlier, every country buys into international because international is everywhere else. But every country also thinks they're special and they should have some kind of special exception to that.
Nick, sometimes there are enlightened people. However, I never finished the story about the presentation in Chennai. I thought that perhaps by being so American and just taking on the CA20 rule, it'd be the last time I'd ever come to India. But this very senior, white-haired, older man, he steps up to the podium and I'm waiting for him to say, "You should get on the first plane to leave." Actually, I was leaving right after that. Instead, he got up and he said, "It was very interesting to listen to Mr. Hanlin give his presentation, and I wish I was 40 years younger." What a remarkable thing to say. Because India is an old and established country with its own cultures and systems and means of living with life. But for this man, who is easily 20 years older than myself, to say, perhaps we need to re-examine what we are doing here so that we can be more modern, was very encouraging. It's my pleasure to be here in India again. This is my 5th time here. Michael and I were talking about this last November at a meeting in Toronto. And he said, look, if you're going to do India. Otherwise, stay away. I guess I'm coming back. And I look forward to. I hope to get to meet more of you today.
So I think, thank you, Bill, and I think with that, there's an opportunity for the audience to ask questions of the panelists. We've got quite a range of perspective views at the table. But as the moderator, I guess I have the privilege of being able to say the last words before the questions. And it seems to me that while financial reporting has become the imperative that has driven the regulators to want to create and help create a business valuation profession, I think what we're seeing in countries like Saudi Arabia, where the valuation profession is growing, it's actually stimulating the economy. And if you think about all the things that are happening in the economy in India, both locally and internationally, there is a huge opportunity for business valuation in India as a career. And I think, Chander, you and I were talking yesterday about an estimate of how many potential professional business valuers you think will be in India within the next couple of years. And I think what was the number you gave me yesterday as your thought of the estimate of the number of professional business valuers that the economy in India should be able to sustain?
Yeah, so at present, I mean, if we try to count on I think business valuers, maybe handful of business valuers, maybe 500 at present. But the opportunity it lies, because unless there is a regulatory regime, people don't step in. So for us who are doing it for the last 10, 12, 15 years, we certainly have an edge in this, but I mean, it's a huge opportunity. I mean, you don't know, maybe easily 5,000, 10,000 people can stuff in. And when it comes to the land and building and plant and machinery, the number is much more, because that valuation is done under some different purposes. Like there used to be Wealth Tax Act and earlier, and land and building valuation you require for different purposes. But for a business valuation, I think the opportunity lies here.
Yeah. So it's interesting because at the IIBV board, we've often tried to estimate how many business valuers, practicing professional business valuers, are there in the world. And every time we try and do a calculation, we get to a number of about 8,000 all over the world. And yet, there's an opportunity in India because of the work that Indian valuers are doing for companies outside of India, as well as your own growing economy. I mean, the number we were talking about that you just mentioned, 8 to 10,000. India could, in fact, be the dominant provider of business valuation services around the world over the next couple of years. It's quite fascinating. So with that opportunity, I wonder if there are questions in the audience that people have questions for. There are some microphones that we can pass around, and let's start here. Yes.
So the question I had.
Yeah, they're coming.
You spoke about the difference in valuation on a same piece of valuation having a variation of about 140%. In India, we need valuations for different purposes, and it could be because the government says there has to be a valuation report based on which the investment can come in, and that has to be, when foreign investment has to come in, there has to be a floor price and below which the money cannot come in. Quite often, the new age businesses are valued very differently as compared to some of the traditional approaches to business valuation, because the numbers are unknown, the companies are not profit making, and yet you see huge valuations in all the new age technology businesses. So how do you reconcile this kind of situation where governments like to tax, in India in fact they want to tax the difference between a certain value which has been prescribed by the valuer vis-a-vis the amount at which the actual investment came in, which could be way higher, and they want to tax the difference as income in the hands of whoever has received it. So how do you reconcile such differences, and do you see such differences elsewhere in the world?
So I think there are a number of questions embedded in your question, and certainly around the world. And of course, it's our pleasure to be in Bangalore, where it's almost the Silicon Valley of India, and there are so many startups and so much. You use the expression "new age businesses," but there is a digital revolution going on in the world, and these businesses are, and Bangalore is clearly a center for this growth. There are, if you will, there's great interest all around the world for education around valuing startup businesses, and there is a discussion at this conference about that, about those technical issues around how do you value startup businesses in high growth situations, non-revenue generating businesses. This is a big issue. But if I may, just because this is a panel on professionalism, if I could adjust your question a little bit for the panel around, will having a profession narrow the range of evaluation? And maybe an ancillary question is, what's an appropriate range? If you said, and I think the example, Nick, you gave, the valuer said the value of the business between 225 and 300. Is that an appropriate range? What is an appropriate range of value? And will having a regulated profession narrow that range and therefore create more trust and more confidence in the work and make the work more appropriate? Is that a fair interpretation of your question a little bit?
But it's something under a regulatory regime and based on certain principles, right? So if suppose there is if in FDI there is a floor price, in tax there is a cap price, right? But we have to do valuation in a manner that one meets the regulatory requirements. That's one, because even if it's a startup and there is an FDI transaction, the valuation law is applicable on that startup also. So if money is coming in Flipkart today and it doesn't fall under the regime of the valuation methodology, then that transaction is not possible. So one, the transactions which are having or taking place in the market, there has to be a basis within the four corners of the law. Secondly, we need to, because see, at times you can do a valuation of suppose 1 billion and investor can put in 2 billion because it's a floor price. So that's a difference in value and a price. Transaction is taking place at a price. As a valuer, we can't comment on that. Our objective is to derive at economic value of the subject entity and make sure it comes within the regulatory framework, because there are different regulators already in the country. So we need to make sure it covers different aspects, because at times in India we are seeing contradictory or overlapping methodologies which affect such transactions. But we need to see the industry structure, the valuation theory, we need to have a concrete thing, and we need to see the legal stuff. And I think there is a need to balance. We are already doing that balance with a lot of clients. So it's possible.
Mark, I saw that you jumped for the microphone.
Yeah, just a
maybe
couple
you want
to, because
yeah.
we do a lot of work in technology companies and startups and such. And one of the things that I try to teach my staff to keep it focused is, while you see metrics like, like in the 90s in technology companies, you see number of eyeballs, or in social media companies, metrics like monthly active users and things like that. At the end of the day, it's all risk and return. That's all valuation is. And so you have to, as far as standards or regulation, as far as evaluators follow the standards and regulation that keeps them focused on those two simple concepts of risk and return, then you'll start to see the valuations converge. Where I think what happens is people forget about those two concepts and they start looking at these odd metrics and look at them themselves rather than being proxies for risk and return.
So just as a follow-up question, do international valuation standards cover such issues as startup companies? How does IVS standards deal with this sort of issue?
We're looking at some of those concepts, but it's with the idea that standards, it just still boils down to risk and return, right? So there's nothing different in terms of there's some complexity to differences, but there's not a conceptual difference in valuing a startup company versus an established company. It's all risk and return. There's some challenges with startups because of the high growth rates and high risk and so on. But it boils down to you just keep your eye on the ball. It's risk and return.
Risk and return. There were some other questions yes, sir, over here.
Hi, morning. I was intending to raise this during the part of the panel that I'm supposed to participate later in the day, but I think the professionalism question augurs the right time to ask this. I'm introducing a different aspect, the aspect of technology in business valuations. I haven't seen much. I think I'm wondering whether this entire discussion is either a stillborn or it might be a redundancy in process. I think you're all victims of your own success. So my first disclaimer is I'm not a valuer, I'm not a financial advisor, I'm not a cost accountant, I'm not a CPA, and I'm not anything to do with numbers. But when I say that you're all victims of your successes, the purest of all languages, to simplify it from mathematics, is numbers. You can't mess around with numbers. They are the only truthful thing, right? One gentleman spoke about Ashwa Damodaran and mentioned about art and craft and science. But at the end of the day, a craftsman uses science and art to propagate whatever his business is. So in this case, we're talking about valuations. Most of financial models, most of valuation methodologies are all items that can be fed in. They are at the end of the day data. Data can be converted to big data. Big data, at the end of the day, you will apply data analytics to it. You will automatically generate financial models. You will automatically generate various things. Is there a chance that technology will completely substitute or disrupt the business valuation industry? you also mentioned the opportunities of business valuers. I think just by an estimation, most of the people in this room must be financial professionals of some sort. I think you've come to the right country where Indians, if they cannot speak English in an accent that's not understood by many, but they are class A accountants and finance professionals. Experts in reverse engineering. I think they're experts in asking you what you want your financial statements to look like, much better than what you want them to be. And with the technology influx, I think many people are prepared to use various things like Bayesian estimations, by probability and statistical analysis, or AI in short, to completely divert the whole profession of business valuations into a mere technology process.
So this is a great question, and this came up at the International Valuation Standards Conference in Mexico in October. Will knowledgeable valuation professionals working with technology experts create the valuation robot that basically will produce a business valuation in a sense automatically? And so in less than 3 words, okay, 3 words, I'm going to ask each panelist to determine whether or not they think the craft or the work of a business valuator can be replaced by a robot.
I'll do it in 1 word. Never.
Okay.
It'll never happen.
I suspected you would say that.
Elvin?
I think it may happen, but you must understand that there is an element of judgment in valuation. So that judgment will still have to come into play, even though you have your robots and so on. And anyway, whatever you're envisaging is probably very much down the road. That would be a different word anyway.
Mark?
No, not to the extent of a robot having an opinion of value. So I think that aspect will always be there. However, I do think technology will change. Technology as a tool will change how valuations are done. A corollary is an example is artificial intelligence and its future impact on the accounting profession. And there's a lot of speculation that the number of auditors, for example, will be lessened because of the advent of artificial intelligence. There's just not going to be the need for humans to audit. It doesn't mean that there's still going to be a need of a human to sign the audit opinion. So I think the same thing is going to happen in valuation. Technology, the tools will change, but you'll still need a human to provide that final opinion.
Sandesh?
So I think about this a lot, like how will technology impact valuations? So I think currently technology is is aiding us in doing valuations, is helping us in doing better valuations. AI reaching the level where it will replace humans. I think the current generation does not need to worry about that. Maybe somewhere down in the future, this will happen. And since we are talking about technology, I just want to recall a conversation I had with a friend a couple of days back, and he's into blockchain and asset digitization. And he was talking about the technology, and he was like, this is going to impact valuations. And I was like, how is this going to impact valuations, asset digitization and blockchain? So he's like, if you have valuation is all about cash flows. And in asset digitization and blockchain, you would have real-time visibility on cash flows. And I never thought about it before, but when he said it, I thought about the kind of impact technology can have soon in the future.
Sorry, Michael, if I may just interject with a very, very brief question. Sorry to impose on the time again, but I just wanted to clarify that when I speak about technology, I'm not talking about substitution of the human intervention into a profession that you practice, whether it is law or whether it is accounting or finance. Also, the asset digitization and blockchains are different aspects that can apply in a business valuation. I just want to crave your indulgence for a very small anecdote. I thought a lot like you guys, and I knew that I was paying a huge bullseye on my backside by raising this particular point. But the issue is, recently we had AlphaZero, which accumulated entire data of moves that are possible on a chessboard. And I was still not impressed. It played chess with itself. Analysts said very good, and we had that right from the deep blue days of IBM. But what left an impact on me was a statement made by a chess analyst after seeing. He said, AlphaZero displayed an insane amount of aggression and a very profound sense of strategic play. The word that I want to stress upon is profound. Profound is a very philosophical term. If we can have AI which uses analysis of different models around the world, at the end of the day, I'm just collecting data around the world. That's all just big data. And it can project a strategy that is to be used at arriving at a certain valuation number, because at the end of the day, we are looking at numbers, even if it's a percentage, right? That is what is going to eliminate a lot of business valuation professionals, reducing the number to maybe 500 and 8,000 or 10,000 to maybe about 2 or 3. You are looking at an engine driver instead of having 600 people set within the train to get the engine running. So is it still a viable profession? That was my point. If I had more, I'll just keep my mouth shut.
Nick. Nick, go ahead, Nick.
My view is that technology and AI can help make the profession more sophisticated. Much more data it can use. It'd be interesting to see how AI develops, but for example, if you're taking into account things like, let's take geopolitical risk and how that can be assessed, then I think that that's where things like judgment are required when you get into the risk areas. It'd be interesting to see whether AI can ever replace that. When you look at things like you mentioned, where you can always rely on numbers, financial models, which I would argue are different to AI, financial models don't always work. The example I gave of 140% difference was leading banks in the world using their financial models to value a portfolio of financial instruments, and you had 140% difference. You look at some of the major financial institutions in the world that have gone bankrupt, or whose valuations have changed significantly over the course of 6 months without any meaningful change in the business. I wouldn't agree that you can necessarily rely on financial modelling and as it currently stands.
And I'll leave the last word with Sandesh. Do you have any views on the automation of the profession in the future?
So technology can always be used as an enabler, but with my limited 12 years of valuation experience, every time I look at valuation, I look at it from a different perspective. When I work with my team, there is an element of judgment that you cannot take away from the valuation. That is my strong view. Yes, certainly from 8,000 to 3,000 is possible, because then quality and quantity can always be segregated. But essentially, to me, technology is an enabler for this purpose. Yeah. So as on date, yeah, so I'll share. I understand. See, IBBI has already undertaken 2 industry-wide consultations. I have been a part to both of these. So after the consultation only, they have formed some committees, and those committees have prescribed the syllabus. The syllabus is already finalized and it is available online. The expectation is that, so as on date, 2 RVOs have already got empaneled. One is the Institute of Valuers, and there is one more. None of the professional bodies have got empaneled as of now, because in fact the professional bodies were contemplating if the institute can itself get registered instead of forming a new entity, because for the insolvency purpose they have made one entity, and for this purpose, so there is an administrative hurdle. You need to have independent board and all that. But ministry at present is not agreeing with having one body, so there will be a separate body. My understanding and knowledge says that this course on valuation will be launched very, very soon, maybe next 10 days. It will be out in the market. maybe the Institute of Chartered Accountants of India takes the lead, because they already have a valuation standard, and I understand they are in discussion with IVSC. There are a couple of points wherein they want to have some agreement, and they want to issue their standard. Plus, I am expecting the valuation examinations also. They are likely to come in the month of March, or because the kind of training they have prescribed is 50 hours. No, 50. So I agree. So the objective, I understand that. So I have a couple of thoughts on that. We can take it offline, and I'll explain you what exactly. But the fact, as a matter of fact, from 1st of April, the registered valuer provisions are implemented. If you do not hold a registered valuer certificate, I am not seeing any extension to the date, and most likely maybe 200 people get qualified, then 200 people will start doing from the 1st of April. So I am not seeing an extension to that date. How it is going to fast, because I mean, when ministry does it, they
So
does.
I wonder if we can just take this offline a little bit. Thank you, because I'm looking at my watch, and we're well into our networking time. I think there's some great discussion that can happen, but I think perhaps one last question, if it's a quick one.
Yeah, it's a question that I want to share my experience regarding technology. So, we used to have like more than 100 professionals in the valuation. We used to do the 409 evaluation. We did automate. And, the science part of valuation we did automate, but our part of valuation still we are not able to automate. So, there is something which has reduced our headcount by 50%. But still there is a chance, of senior people who can, take the judgment. It's very difficult to automate. That's something which I want to share with you. The other thing is I just want to understand regarding the IVSC's role for building the valuation practice in India. So what are the things you are doing for supporting the valuation professionals?
Okay.
So Nick,
So
perhaps the last word to you.
Yeah, so in terms of IVSC involvement in India, so we've been involved in the consultations with MCA. We've had and started dialogue with the with IBBI, and we're continuing that dialogue with Dr. Sahu and his team tomorrow in relation to things like standards. So there are a number of different member organisations that we have in India, such as the Institute of Valuers, PVAI, ICMAI, ICAAI, and there are a number of others as well. And we were in dialogue with them as the types of standards that should be used. There's quite a lot of different views. The views are that IVS should be used as at least a basis for the standards here. That tends to be the general view. There are one or two questions from one or two organisations as to whether or not they should be weakened in some way, which we have a public interest remit, and we're not sure whether that should be the case or not, but we're continuing that dialogue, and we're looking forward to hearing Dr. Sahu and his team's views tomorrow. But we're engaging very much from a professionalism and standards point of view with as many organisations as we can in India. Obviously, with India and China being the key economies of the future, we see this as a very good time to be involved here, and we hope that the right decisions are taken in terms of the future approach for the public interests of India, as well as the right answer for the profession.
So if I may just thank the panelists for their wide range of views, and encourage you as the audience to meet with the panelists in the networking and carry on your dialogue and your questions. To me, it seems quite interesting that the government regulators are building the foundation of a profession, and yet the interest in the audience is the role of technology and actually evolving the profession. It's a little bit like the self-driving cars. 5 years ago, nobody would have said that self-driving cars will exist, and yet we see them on the road in North America already. And we're at a stage where we're trying to devise the traffic laws We're trying to say, well, what is the speed limit? What are the what side of the road should we drive on? What side of the road should valuers be on? And yet the opportunity is in the technology going forward. So with that thought, how about a round of applause, an energetic round of applause for our panelists. And thank you all for your questions. And let's take a networking break. Thank you.